Good morning, everyone. Today's Friday, April the 19th, and this is the Moneyball Morning Report for the Benzinga Pro platform. We're starting with the Qs today. Netflix reported, and I think their low is like 570. We're pretty far away. We're still $50 away from making anything look good for that, so I'm not quite sure how Netflix will do. They blew the doors off earnings. They just guided down and said, hey, they're not giving us any more subscriber information. The big spike down, of course, we know is because of the continued skirmishes across the Middle East. We will talk about that just very briefly when we go to oil. But what we are seeing is a very big buying wick that suggests that all the shorts felt like it was time to cover once we got to frontline support. So let's dig down a little bit and look at where we are from a weekly perspective, right? It's the end of the week. Here is the wick, and this is the line. And let me see about remove all annotations. Yes, let's go with a clean chart, right? Take a look at this. We are sitting, this is the wick, right there, 17,165, end of the week formation. This 1, 2, 3, 4 weeks in a row. It's been a really long time since we had 4 weeks in a row. I'm looking at December 2022. This is a support zone. And so traders faded the news until it came into the weekly support and they bought it again. So this kind of behavior is very organized. It is extremely organized. And so this is not what fear looks like. There's no fear here at all. A little bit of greed going short is my thought. And a lot of algorithms are really in charge right here. But here's what we're looking at. Potentially today could turn into a buy the dip formation. Okay? As long as we hold above the close of yesterday, which I think is like 490 something. What was the close of yesterday? Oh, 529. That's what we've got to get up and over. 529. If we can get up and over 529, the sellers are going to cover even more, and we could rise into the next level. But today, it's important that we look at all of these weekly charts nice and clean, nothing else going on, nothing about momentum, just about where are the traders looking for value, and that is near the congestion of this prior week breakout. And that's what we have to see the prices hold. Could you go short right at that 17,530, 17,540? I say that sounds pretty fair. Just if it gets to 560, you got to get out. Okay? That's just it, right? Potential buy the dip for the day, but if we lose the low of yesterday, traders are going to turn around and try and head back down here, right? 376. Really heavy congestion, a broad line of support here. So we could draw a little line of potential support / resistance, right? And so we could look at that right there from that perspective. Let's take a look at the ES. I'm in the mood to delete everything and just have a nice wide angle look at, okay, why is it not allowing me to do that? Let's try this. All annotations. Yes, please. Okay, first the day, it's up over the low of yesterday. The close of yesterday, 50.48, that is a huge line in the 0 DTE options and the 1 DTE options. So getting up over there, we might see buyers, okay? The biggest put wall sits at 5,000. If we lose 5,000, again, right, and I am going to just put the big round number there. If we lose 4,999, traders are going to have to, those of them who are short those puts in a put wall, they're going to have to sell more so they are delta neutral. So this could aggravate downside motion. So I'm going to put an alert here because it's a very important line in the sand. Okay, now it looks so far like a buy the dip formation. Let's take a look at the weeklies intraday, buy the dip intraday. Look at what's happened to us. old resistance that broke away, that became support right around the 5066s, right? So if we get up above that zone, we know that we've got price action that could bring more buyers into the market. Right now, this is the battleground. Traders have broken this line. Sellers want to stay below the line. Buyers want to get above it. So it's going to be very, very noisy. Look at this rotation. We've had 3 down weeks, right? And where is key support? Well, big breakout support is not, I mean, it's way back here, 48.30. And then we've got these guys sitting here at 49.55, right? Somewhere like that, 49.37 is what's happening. If price action turns around and starts running up the flagpole, which I doubt it will, right? That's going to be near-term resistance. But we are going to sit in this. I would not be surprised if we sloshed all the way through this area from a weekly perspective. If we close the week above 50.48, buyers are going to try and get us back up to that 51.30. That's easy as it gets, right? That's what is very likely to happen. Right now, the traders are just moving to lower value. They come into heavy congestion and they buy. This is extremely orderly. This is not fear-based behavior at all. It is not. It doesn't look like that. Okay, so let me delete all of these guys. We take a look. 3 big down weeks. Look at where it bounced. Weekly support. Weekly support. Not caving through anything, just weekly support zones. Now it's trying to get up above this old resistance area. Right? Maybe we move it there. And we create an alert. See if it gets up into that zone. And over, right? We really want it to get up and over. And then buyers will take us into heavy congestion up here. If not, we can head right back down here. So what do you want to look at? You want to see how price holds above 38,000. If it can't, because it's a nice round number, we are headed to the heavy congestion near 17,650. Excuse me, 37,650. Okay? That is what we are looking at right now. This is not a fear-based environment. Let's take a look at oil. It gapped up and then is falling. Take a look at oil this week. Three events. First, because Israel knows that Hamas and Hezbollah are all funded by Iran, they did something at the embassy. Iran fired back, and then Israel fired back again. 3 different events in the same week. What is oil doing? It's fading. Now, is it coming into higher lows? You betcha. Oil is in a bullish formation, but it is not bullish right now. It is trying to retrace and do a little bit of mean reversion. And take a look here in the CL. It's below this 82.72, which I think is a pretty clean support line, which it might not be a bad idea to put an alert there. Right? Let's put an alert there. Any way it goes through. Right? But my suspicion is that this area at 79.60, 79.80, that's where we're headed. That's my suspicion. Why? Support, resistance, resistance, support, resistance, support, resistance. It's going to go chop around there. Everybody's going to say, hey, this value looks great at around 80. Let's take it up the flagpole again. That's what it looks like to me. All right, so we want to be super careful here. And when you are trading this one, look for those boxes, right? Let's put all our indicators back on here. Take a look at the, oh, I want the volume inside of here. Whatever. Take a look at the formations and look at this box of price pressure, right? This box of price pressure has a baseline at 81.50 and a spike at 83.70. So if you're staring that down, those should be the edges. And if it breaks your upward zone, get out because you'll be shorting up there. And if it breaks your downward zone, get out because you'll be going long at this base, right? Because right now it's sideways to potentially down, right? But it could easily bounce based on the overall motion in the market. Okay, let's take a peek at gold. Did I talk about gold already? I feel like I talked about gold, but maybe I didn't. Yeah, this little chart is not telling us that price action is doing anything but moving sideways, right? Now, is it in bullish formation? Obviously, right? Where's the last time everybody agreed it was a good place to buy? Well, that would be here, 23.28. Everybody went, woo, that's an awesome place, let's buy it. How do I know that? Because there are no price prints underneath after this time. That's how I would say that. So what are we seeing now? Everybody's saying, I don't really want to hold any past my 23.90 area. And then they're chopping around at this new zone at 23.67, right? In the broad picture, this chart is very bullish. Very bullish. It's so bullish that it needs to take a breath, okay? And it's being driven by currency events, not geopolitical ones, because, as I mentioned, it's just been a week, and this is the kind of price action that we're seeing based on all the noise that we've had over the weekend and Friday even. Nothing going on. Okay, let's take a look at SPY. SPY, I'm very glad we rolled those, right? But SPY took a tumble. Take a look at this. Let me get all of these things out and we will just... Sometimes I don't fall in love with my lines. Sometimes it's just good to start with a nice clean chart and say, wait, am I seeing the same things that I was seeing before? Right? 493, very big support zone. It stopped well above it, right? Stopped near that 490. Stopped somewhere around here, 494.90. Right? So what are they doing? Look, above the close of the prior day. That means the bears are going to say, whoa, I better run for cover. So this is the line in the sand that we need to hold if we are going to be bullish through the course of the day. Remember, what does a chart want to do? Chart doesn't want to do anything. What do the people trading the chart want to do? They want to walk up the last 2 to 3 candlesticks or walk down them. This is trying to get through the low of this day, which is 499.12. They're just above it. Then they're going to want to get through the close of that day, which is 501.06, which, if you can remember, we danced a lot around that number, right? We've had days and days of dancing around that zone. Let's go to the weekly. This is so bullish, folks. All they are doing is just unwinding a little bit. Doesn't feel good because everybody's just saying, it's been up, 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 up. And now the market is doing something very natural, right? This is natural right here. And this is not. So we're pulling back. We should chop around right here. We could chop around and then head a little bit low. I have no idea. But what I do know is this is not a frantic space. Nobody needs to go out and buy long puts far out of the money, far away. That's just a waste of money. They're going to expire worthless, in my mind. Could we say, hey, I want to try some put action here? You can. It's just that everything's been moving very much off of these support zones, and they easily could again. So my thought is, if you're looking for puts, wait for the bounce to buy them when they're cheap, not when they're expensive. Okay? So put an alert at 4:35. If it gets back there, then, maybe that's the time to buy a put, because I do believe that we sit sideways over the time that we're in. What is the market going to try to do today? I don't know, but we definitely need to hold 420 to close the week here, or there's another slide that's easily possible in the queues before the next wick, right? And that's down here at 408. I'd rather go short calls and collect revenue stream, right? I'm a chronic option seller. I would rather go short call spreads than long put spreads. Or you could do the combination of both, really, and build a combo. All right? But that's it for me. I am on IBD Live today from 9 to 11, and then I'm on the Benzinga Options Show from 11 to 11:30, and then we'll have our Zoom meeting and have some discussions about where we need to take some profits on these bearish positions that we've had. All right, take care, everyone, and I'll see you shortly.